thing.
Yeah.
Yeah, it's.
Yeah, I'm coming here more often. It's the best week I've had in a long time.
Yeah, I mean, Square finally went up and hit its target too. I mean, and the transports are out of control this morning with all the grain, all the transport companies.
Oh yeah, this stuff's going to be coming out of storage, but there has to be some demand for it because, as you see, it's on a July expiration. July expirations are important in the grain market because people start to get nervous about, is there enough out there, and they start pulling a lot of stuff, a barge full of stuff out of storage. So we'll see how much. And yesterday's numbers were supposedly, somewhat bearish. But the market seems not, as you saw, the corn initially sold off hard, and even the beans went down a little bit, but the market is now becoming somewhat skeptical, or there's a big buyer out there. So that's where we sit. We'll wait and see. And if the news out of the Trump about it's Trump and Lighthizer now running this show. So Navarro and Kudlow and company have been sidelined. So let's see what comes out of here. I think that may be an interesting tell about what's going on.
Yeah, I'm just kind of waiting to see how they price everything out here for the delivery. So, I was talking to Gruesome, and, he just said that Cargill was, again, the big producers were all short coming into this.
Yeah.
And that guy lives on the North Shore in Highland Park, and he was trying to squeeze him into today for this delivery.
Yeah, well, it worked. The corn, I mean, it was the July corn that took out those levels, but I told you I was watching SEP, but it was certainly those July levels.
And I bought Dees because,
smart.
Isn't that much, and it gives you more time. So I just thought it was a better trade, but either one was a great trade.
Yeah, and now we just have to, he's with Trump getting those massive negative headlines about Trump pushed back, Trump defeated. Those are dangerous headlines for him because he reacts like a 2-year-old generally, and just starts tweeting maniacally in order to push back against the negative headlines, and he'll go after other stuff, which makes the trading day interesting, but certainly volatile and not necessarily beneficial to my positions. So, these curves steepening I think we're going to get some big moves. First of all, because what I've always thought and continued to think, and I've been wrong about it, is I thought although the curves, the 210, which is what I speak of, or the 530 has actually been steepening anyway, but the 210 is back to over the 200-day and solidly. And a lot of that, I think, comes because of Powell speaking that there will be a day of reckoning for the fiscal irresponsibility of the U.S., just that he doesn't know when it's going to come. But that's why I don't think these curves can invert. Yes, I know the 310, I know, but a lot of that is because of the impact from the actions of the ECB, and that pushes the global curve flatter. Can't help it as people look all over the place to find some type of return.
Yeah, right now in the corn, I'm eyeballing 457.
Yeah.
I got an oscillator number up there, and there's some other matches that you're gonna need it to close over there to really get going again, or it's just gonna consolidate in here, I think.
I saw you noted it in your work this morning. That Euro Swiss is very interesting here, because this is something that ought not to be happening, and you have to be worried about the Swiss coming out and intervene, because this cross is getting Let's see.
Yeah, I mean,
110.90.
Yesterday, you thought it was going to go, and when it
Yeah.
went shy of the fibs, and completely reversed. And I mean, every single day, it's the same thing. You see one of these patterns, and you got to be really careful with it.
Well, what in the currency markets, and I'll tell you what, the Canadian has done very yeoman's work here, as we talked about, and that's the difference between an analyst and a trader. Is that when I discussed this with David Rosenberg about the Bank of Canada, that where he thought it was a very dovish, we talked about it in real time because they were breaking the Canadian hard. I said I had wish orders, which I did get satisfied at some really good levels, but he sees it in certain ways as an economist analyst, and he's a very good one. But it always shows the difference between somebody who actually, and he'll be the first to admit it because he has said it to me. He says, of course, the way you react and the way you see things as a trader is far different than the way I'll see it in the longer term picture. And that's true. And especially in today's algorithm world where the duration of focus on any one thing is really minimalist compared to the way we used to build positions 20 years ago, 25 years ago, 30, you just don't see that as much because of the dislocation that takes place in markets due to the ability of artificial intelligence to search out things using algorithms and to be able to deconstruct all the work that you do, Judd. I mean, there's so many systems out there searching for the type of work that you do.
Yeah, I wish I could automate it.
Yeah, well,
Then I don't think it'll be as good.
Maybe. No, I don't think so either. I put the human. And now the interesting thing is that the yen turned around because the yen was weak out of the chute last night. So there was an interesting article. So I'm going to come back to the Euro Swiss. There was a little blurb yesterday in the FT, and that's why I need to look at things rather than anybody else's eyes. But the FT had that article. I don't know when I didn't talk to you. Did I talk yesterday? I forget. Whatever. No, I didn't call it. The FT had a piece that Goldman was looking for some type of dollar intervention. They said there's a slight possibility. So that sent off alarm bells, and it was yesterday's FT. That set off alarm bells because the Trump Lighthizer, Lighthizer will tell Trump about the great success of the Plaza Accord. And it was a great success for accomplishing what it wanted to do. You and I lived through it, traded through it. It was very interesting. So that's when Goldman starts talking about it, there must be some discussion going on somewhere. And I'm wondering whether that was, the Swiss and yen are acting very interesting. Now, the euro should be involved in it too, and it was higher this morning. But the euro is so plagued with so many friggin' problems that, people now use it to sell them because it's a carry currency. And for those who don't understand that, when your currency, when interest rates are low enough and people don't think your currency is going higher, a lot of times you'll borrow in it and use it to finance a lot of other positions. So that's what you have to be aware of. It's far too early to discern that, but it is catching my eye, and the Canada shot up. So is there some discussion? Because don't diminish this. Trump is very concerned about the dollar. And it's interesting because we saw it Wednesday and Thursday again with Powell, and how many people want to go after Facebook via Libra.
Right.
So this is not to be, as I told you, I said, I chatted with you yesterday and I said, Facebook's going to have some problems here because they're embarking upon getting too big, too fast, and really punching above their weight. See, they think that they can replace government. And Zuckerberg is arrogant enough to believe that. that, hey, we can do what everybody's been trying to do. You know, this is the ultimate in globalization. But as I always tell people, and I've written in my blog for 10 years, with the whole thing with crypto, and not quite 10 years on the crypto, but when I first started reading about crypto, as I said, when I was on with Credelli, when we did that hour-and-a-half podcast with Santelli back in 2016, I said the interesting thing about Bitcoin was not Bitcoin, but blockchain. And I still adhere to that. Blockchain is fascinating to me for many reasons, and I'm still learning about it as I go along every day. But governments do not like competition. And the ability to monopolize fiat currency is an area that governments hold near and dear to their complete existence. So they're going down a road here. They have to be very careful. And if you listen to the questioning that was taking place, this is a way for certain people who want to regulate fintech, not only fintech, but of course, what Shoshana Zuboff calls surveillance capitalism, which is, you know, crushing big data and keeping there are people who really want to put a stop to this. So the question will be, has Zuckerberg overreached? Now, he's done a lot of work on this, because when I was reading about the rollout and who they went to talk to, and really I see it in the limited way that I understand it, as basically recreating an SDR, but it's being issued by a private issuer, meaning Facebook. And I say it's an SDR because there will be a basket of fiat currencies who stand behind it. But they're going to go after them on banking regs, all types of things. And I go back to, I will blog about it next week when I start writing again, but the famous exchange involving Bernanke back in either 2012, 2013, where he made a comment that I found absurd as a global macro guy of so many years, in that he said that he understood Bitcoin but didn't understand gold. I started gagging. Because that brings me back to Volcker. And one of the things I loved about Paul Volcker, will always love about Paul Volcker, is that Paul Volcker respected markets. And one of the things he respected most was the power of gold. But he viewed, as a central banker, and I know that he said this because I had Pat Lynch actually asked him at a conference that I wasn't at, but he did. And Pat Lynch openly asked him at the CME conference down in Naples whether or not gold was his enemy. And he wouldn't answer it outright, but he danced around it in a way that Volcker could. And, you know, gold was important to him. And Pat was texting me and going, oh, you know, yeah, I got the question. He said, nobody's happy I asked it, but he did answer it. And I'll get Pat's direct response here, but it was interesting because as a central banker, he viewed gold as his enemy because he thought it was a barometer of not inflation, but the type of uncertainty that undermined the credibility of banks. So I always find it interesting, and Bernanke irritated me as soon as he said that, because it showed me how lost he was in his ivory tower. And that's my criticism of the Fed for the last 15 years, is that they don't want to know what markets think. Again, I go back to the line I used the other day with Buchvar and Rosenberg, which is they're seeking to contain markets. And that's a gigantic mistake. Because when you seek to contain markets, it's like water. It's going to flow somewhere, and it's going to look for the weakest spot. That's what happened in the subprime crisis. There was a weak spot. And you know what? The markets got to it, and the banks couldn't control it. So rather than trying to contain it and therefore, as a subset, control it, learn to respect it and understand the signals it's trying to give you.
All right, we got a couple of questions here, Ira, so I'm going to flip them out.
Yeah, please.
Peter,
Listen, I only have until about 10 to 10, but kick my tires hard. Let's go.
Okay, so Peter asks, is it safe to say the corn market is putting in highs in July would be very bullish? And Ben asks for your take on the spread between Fed funds and IOER and how it might affect dollar shortage.
Okay. You know what? Judd, you probably have better seasonals. I don't do the seasonals. That's not my strength. I may ask somebody about them. I would view that though, that who asked that question about the corn? Peter. So yeah, I would say that coming into this, especially again, and we go back to that June 28th data release where we saw that violent movement in the corn. So people are becoming very skeptical about that the crop, even though yesterday's numbers that came out, because that's why we had some grain movement yesterday. There was the WASDE report, and it wasn't really much different, but you saw how quickly the market said, you know what, we think this is BS, or there is a very large buyer out there for some reason. And again, what the WASDE did show is that the Russian production has been down. But I'll throw in one more thing, is that, you know, there's a massive heat wave that has crushed Europe, and France has been under its boot. So wheat production may be way down due to that heat wave. And again, the factor in the U.S. is that they couldn't get the stuff in the ground, and there's just too much moisture. So I would view it as, yes, it's very bullish. But again, you got to do your technicals and find out where we're at. But the fact that the corn has taken out that level that we talked about, the bar on the 240, in fact, it took it out pretty convincingly. Yeah, took it out pretty convincingly. It died. It was struggling with it yesterday. The beans haven't quite gotten there, but I'm looking at that bean 240, and now after the Julys go off, I know, Judd, you do this really well, so you'll walk them through it. But I would view it as a very positive development, very positive, and couple it with what we talked about the other day, the CRB and the Bloomberg commodity index, is that these things are starting to break out. But if that's right, these commodity indexes should take the silver. I'm watching silver very closely today, because if these commodity index really start to move out of here, I'm looking for a move, and then I think silver should start to gain on the gold. But I'll tell you what, a lot of money, including my own, has been lost thinking that this is possible, but they've given you kept higher levels, and even the silver gold this week has performed miserably yet again. So if this all goes in sync, meaning you're going to start to get a commodity rally, and that may be why the Canadian dollar turned around this week, where others thought, I didn't think the statement was really that bearish. But it may be that the commodity currencies start to catch a bid in anticipation of some rising commodity prices. And again, I'm not pointing that to gold, by the way. Gold already has done a lot of work. And, you know, my view is it's not an inflation play, that it's always an issue of central bank credibility for me. Yes, if inflation really started to pick up and the hands of all the central banks were tied, but that's really making the same argument that I've made for a long time. So I will stick to that. And again, here we have Powell for 2 days, and what we've seen is dramatically steepening curves. But if the commodities start to really gain here, because the market's not ready for it, you know, everybody's been bearish. And as I told you, the Chinese will not show their hand right away. If they're the ones buying and taking deliveries, we'll have to watch how many. Then it'll be significant.
At this iPad ETN is breaking out above its 200-day.
Yeah,
I don't know why I'm not authorized for the CRB, but you know, I get the Bloomberg Commodity Index gapped up today. 812's the 200-day in there. You know, they all kind of look different. So the Goldman looks a little different. They all look a little different.
Right, because they all have different weightings.
Yeah, and some of them have cattle, hogs, cocoa.
Right,
whatever.
Right. I do know that seasonally, this is because I'll ask questions. You know, that which I don't know, I ask about, which is, hey, so there's a strong seasonal to be long cattle and short hogs here, but that's a tough play for me because the hogs have been, you know, decimated by the Asian the swine flu, which has really, you know, decimated the Chinese. So even though the hogs came way off the highs, I don't know, but
the hogs
that is
still
a
don't
seasonal.
look good, and they hit the feeders today against the cattle.
Yeah,
so it's all
you know what?
going on.
Yeah, because the cattle really is starting to look strong by any measure, and that'll also lead to greater demand. But again, you know what? And I haven't gone back to look, and somebody should post this on in your room about the how the ethanol mandates change, because that's going to affect corn prices too, especially if the Chinese are in the market. And as I raised that issue, a couple of weeks ago, that the first thing that they would do is look for grain. And as long as, Trump, today's a dangerous day, as I say, because, with Trump taking a beating on the front pages of the mainstream media, he's going to be in a very surly mood. So who knows what's going to come out of his fingertips.
Yeah, so, today we're going to, after today, you're going to have a much better idea how the grains are going to trade going forward.
Yeah, you know what? I'll make a joke because I'm always making jokes anyway. But where Warren Beatty famously said, or Woody Allen said about Warren Beatty in an interview, he said, "Well, when I'm reincarnated, I want to come back as Warren Beatty's fingertips." So, in the tweet, now that I'm in the financial world, I want to come back as Donald Trump's fingertips as he tweets, so I can get a little leg up.
Well, somebody is getting a little leg up every time he does it.
Oh, there's no question. No question.
I had a conversation with one of my childhood friends. I've known him since I've been 3 years old. Huge Republican, okay?
Yeah.
So we were having this conversation, and he's basically a flat earther. He believes that the world is flat, okay? Yeah. I said, you must predate Christopher Columbus. He said, no, that front running in the financial markets doesn't happen. And it's like, what planet are you on?
Right. And what was this? Who had the second question? I didn't get to that. But I would make that the grain market, the complex looks bullish. But I'm not rushing in here. I look for levels of support now. Now that it took out the resistance. I want to see. In fact, I have orders in to buy some more beans, but I've been sold some out up here. I had orders at 905 because that runs into the June 28th technical picture on the AUG beans. What was the second?
Here it is, and the Novies are right up at their 200-day on the daily.
Yeah,
but that's not the one you want to look at. I think you got to look at an active daily, and where does it come in there? It's way above it.
Okay. But what was the second question? I'm older.
Okay, so Ben just basically said, what's your take on the spread between Fed funds and the IOER and how it might affect dollar shortage?
That's a great question. How it affects dollar shortage is still being measured. But I believe that it does, Ben, because they're still pretty close together, even though Jerome Powell said that he said it in his congressional testimony this week that IOER, the interest on excess reserves, is the most powerful tool, which is why they're trying to set up that repo facility, and it makes it also interesting. And that's why if I was the Fed, forget the Fed funds rate, I would cut. And I know my daughter Alexandra, who's at Bloomberg and covers the bond market and the Fed, she disagrees with me vehemently, but that's okay. I'm a trader, and she's looks at the world through a journalist's eyes and learning to look through a trader's eyes. But I would cut at this meeting. I'd do it tomorrow. And this is what I like about Judy Shelton, because she thinks about these things and is very open about thinking. There was a very good piece. I say very good because it really revealed a lot in the Washington Post yesterday or 2 days ago that she wrote that's worth reading. But I would cut the interest on excess reserves by 50 basis points tomorrow. Now, I know that that'll cause havoc in the markets, but I like that havoc. And the markets need to have that havoc. They need it because you've got to start to let markets work here. I want to let markets work. Others don't want to. Interesting that the Fed funds futures are up today. So I would like to see that unwind. And I would like to flush all these reserves that are parked at the Fed out into the system and give them some velocity. And the Fed funds has become very insignificant at that, as the Fed itself admits. You know, because when there's a very slight differential, people just park it because, as Jerome Powell said, it deemed them the safest overnight investment you can make in the world is to park funds. Which I'll come back to the concept of the narrow bank, which nobody even asked the question. I expected somebody from the Senate, but because this is part of that discussion. So is it creating a shortage? I don't know if it's a shortage, but it certainly has impacted the velocity of money in the system, which is what the system is really dragging under. And it's kind of what Druckenmiller warned with the double barrel approach, because when they were raising the Fed funds while they were also shrinking the balance sheet, he said you were courting disaster back in his December interview. So I think, I'm not sure that it's created a shortage. Well, I guess the end result is that there is a shortage, but it has certainly impacted the velocity. And then you couple that with the regs, the banking regs under Dodd-Frank, and the requirements for high quality liquid assets, and that means that banks hold on to more cash. So you get a double barreled approach again. So that's where we sit. So yes, the answer is yes, and I would cut those interest on excess reserves immediately and see whether my thought process is right or whether their thought process, except we don't really know their thought process, because when they want to tinker with it, they cut it by 5 basis points. Well, it's not enough. It's not enough. And that brings me to that narrow bank, which is an ex-Fed trader, an ex-Fed desk guy, and above, he was at a much higher level out of the New York Fed, is trying to establish the narrow bank, which is a bank that takes huge institutional deposits. And if they could build up 100 billion, 200 billion, managing the money overnight, and shave 20 basis points and go, okay, they want to put that money on deposit at the Fed as excess reserves. And the Fed is fighting this tooth and nail because it really reveals the hole in this whole concept. So not one question was asked, though, which boggled my mind. And I only know about it because my daughter, who covers the Fed, has written several articles about it. So it's really kept me up to speed. And I haven't heard much lately, but you can go look. There's been things filed by the Fed. That's the open part of it, against the establishment of what's called the narrow bank. Because it's narrow because that's all they want to do. They're a money management firm, kind of like Sentinel was, or others who couldn't do it as well, but they're going to put it on deposit for you at the Fed. What better is that? So, yes, it's definitely impacted it, and the Fed won't be honest enough with us to really reveal how much they think it has. So, I want market action. So, therefore, I want them to to cut the interest on excess reserves and force that money out of the Federal Reserve System. Maybe they'll do it after they stop the quantitative tightening at the end of September. Although what they should do is announce the end of it right now, immediately after the July meeting. That would be one of the big changes that they could make. I hope that answers.
Yeah, that was great. In the meantime, all I get every morning is people telling me to be short. I want to be short. I'm short. This is where to short. It's like, okay, guys, enjoy while the market's going up on money for nothing.
Yeah. Well, in the last, I sent you the piece that I'm going to get off, but there's that article in the FT today about a shortage of bunds.
Yeah.
You know what? And I've been adamant, always, you know, trading it is not easy because of the involvement of the ECB. But, although I actually put them on really good today. The butterfly, you know, I talk about the butterfly because if you're chasing yield, you got to own the Italians. But there's an innate shortage, and it's why I argued with Gunlach and Bill Gross through my blog, but I was very adamant about it with Santelli over the years, that there is a shortage of bunds because the Germans run budget surpluses. Well, that calls into question the whole ECB, what's called their capital ratio, because the ECB in their QE program has to buy everything on a pro rata basis of your capital key, which the capital key is only based on each country's GDP level. So if, like Germany's 18% of the EU GDP. So the ECB, when it does its quantitative ease, it could, like Draghi says, it could be different day to day, of course. But, you know, over a 2-3 month period, 18% of the things that it buys has to be German. 14% has to be French. 12% has to be, they have to stick to that capital key. Well, there's just not enough German bonds available. So has he been fudging? That's going to be the issue. Has Draghi been fudging what he did? And if he has, he's going to run askew. Askew is the wrong word. He's going to run afoul of the German High Court. This is going to get interesting, which is why that article in the FT was interesting. And it also means you can never really, you know, within Europe, you can put on spreads, but to be outright short the Bund is insanity. You can use it as a spread vehicle because, again, in the same way as in the United States, the Bund, when you do repo, you have to use the highest quality available. People don't want shit. They'll take a treasury bond and give you cash. That's how repo works, or vice versa. But they want the highest quality, and the highest quality is in demand. So everybody wants the highest quality credit in Europe is, of course, the Bund or the Dutch, but there's just not enough Dutch bonds because the Dutch economy isn't big enough, or Austria or Finland. But those are the premier credits. And if there's a shortage of them, it really causes problems in the entire funding system. This is what you have to be and stay aware of. It's a very important article. These guys have gotten crushed because of it. This is going to become a bigger issue, but it stands to be even a bigger issue because those who are looking to poke at the ECB in Germany, and there are many, may find this as a vehicle to open up the door to really smack them. So, you know, again, you know, and Judd, I've been very adamant about this whole issue that, you know, I'm always talking up the Bunds for that reason.
And it's been big, and with the conversation you had about the coupons and everything else, and why the charts look like they look, you know, now it makes sense.
Right. Exactly. And this is a very serious problem for the entire financial. You know, again, everybody sings Draghi's praises because, he's safe. Same with Bernanke. Again, it's Chamberlain coming home from Munich. It all looks good. But as you start to watch it unfold, you go, huh? What did we do here? What have we, placed ourselves in? But that's what they're hoping for. You go back to Rahm Emanuel's comment is you never let a crisis
go to waste.
I'm sorry?
He said, never let a good crisis go to waste.
Right. And they love, and Draghi has blown up this crisis. You can argue with me, but bring it. But if you want to have this open discussion, anybody who's, I only care about it how I'm going to make money. As a humanity, I don't want bad results, but, I'm only looking at it, is there an opportunity here and how do I avail myself of that opportunity? And it really puts the Swiss in a bad situation. And the Europeans are attacking the Swiss anyway, as we talked about earlier in the week, because they view Switzerland, as an example. And they love setting examples. They're like a bad parent. They're going to make an example of another kid, but it's an immoral position because you should treat each thing as an end in itself, but they're too busy setting examples. They're not going to make an example of Switzerland because Switzerland knows where all the dirty money is. And believe me, everybody in power has dirty money, especially in Europe, where they hide it because it's not that people don't know that they're wealthy. They don't pay interest on their wealth. It's a great way to build wealth when you don't pay taxes on the increases in your wealth. You want to get rich? That's the way to get rich. So these are very, very important things. Keep your eyes open. Where we find opportunities is the key. Otherwise, it's just all, more nonsense discussion. But that's what we're about. We're about seeking opportunity because that's what comes from all this work and all this discussion. And the kicking of the tires is the opportunity for profitability, for profitable trades with the least amount of risk. If that's what your goal is, I think your room is the place, a must stop by. And I'm promoting Judd because, I've been here now. I've done this enough, I think, over the last month and a half where I've come in and I hear the discussion and I see what emanates out. So that's good. That's good.
It's always great to have you in, and everybody appreciates the conversation. But we picked out some really good trades with you over the last couple of months. It's been awesome.
Yeah, you know what? And it's interesting. This is it. Then I do have to go because somebody's coming. But as we saw yesterday, the bank stocks, the yield curve steepened. The bank stock, we talked about it 2 days ago. It's a knee-jerk now Pavlovian response. Yield curves, so they're looking for every reason to buy the financial, but they can only do it when the curves are steepening. They are now all reacting to that. So we talked. What bank did I give you the other day? Bernstein, right? Based on the Sandler O'Neill takeover, I said, if they're going to start coming after these medium-sized fund aggregators, pay attention. And if the curve steepened, there's opportunity for some of these institutions to be making more money on the deposits or the accounts that they hold. I guarantee you, Interactive Broker. That's why what's one of the things that he cites is how much he pays you on the excess capital in your account. Yeah. And that's a big thing. Hey, I didn't get for years when we were at zero with all the excess capital I keep at Shepherd, I wasn't earning anything. But as soon as we went to 1.5%, 2%, I now buy 3-month T-bills and roll them. It's too much money to leave on the table. And I don't care if you have $100,000 in your account. That's too much. That's $2,000. Why should I leave that to them?
Because they want you to.
Of course, that's the way. That's the way they really get fat. Yeah, that's the way they really get fat.
As Barry said, that's my money.
Yeah, it's his money. Believe me,
his money.
Him and I,
you're going to spend it in commissions. That's my money.
Him and I went more to nose on that. I go, no, that we ain't playing that game. And he, oh my God, I learned more from those negotiations than I did in any business class I ever took in my life. Go negotiate with Barry Lynn over fees and earnings. That's an education in itself, and I appreciate everything he taught me, because he was a great negotiator, as was my mentor Lenny. But Barry was tenacious.
Oh yeah, those guys were brutal.
Yeah. All right. Maybe I'll come back later. I got to do some stuff. I think this is far busier right now, the first 2 weeks into the 3 weeks into summer than most people thought. And now with the Fed and other central banks coming up in a week and a half, 2 weeks, it's going to be even more so. So hold on to your hat. Oh, let's go look at the grains. Archer's popped a little bit again today, but we still can't get this stock going.
Yeah, there's Bungie. Bungie looks, it's still in this zone.
Right.
Looked like it wanted to go early and stopped. I don't know.
Yeah, Nutrient, which is basically a fertilizer, potash. They had bought potash, so they're struggling because there's just not the demand. Now, if you get high crop prices this year, they will become a good play, because next year, we'll go back to planting fence post to fence post, as the farmers would say. So pay attention. All right. Thanks, guys. Thanks for taking the time. Keep the question. But Judd, put together a list of questions. That's packed. You know what? And if you tell me there's a bunch of questions, I'll come in and that's all that's all we'll go after.
Okay.
Okay. Take care.